welcome to the IMF 2026 spring meetings. Now, we are going to discuss what we call Europe under pressure. Europe is under pressure because of the growth model, which is stalling and needs to be re-energized. Europe is under pressure because of geo-economic developments and geopolitical developments. And clearly, there are vulnerabilities which require further economic resilience. And Europe is under pressure when you look at a number of countries which are struggling with fiscal sustainability, but also when you look at spending pressures which are going to emerge, not so much in the long term, but they actually emerge in the medium term, and some of them have emerged already. And clearly, these challenges are absolutely not abstract, and they require concrete answers, but much, much more importantly, they are requiring concrete action. And luckily, today, I should say, we have somebody here who will not only give us the answers to all of these questions, these three topical areas bring to us, but he is also the person who is in charge of moving things and providing the action on the European Commission side. Valdis brings to this conversation an exceptionally rare combination of perspective. He currently serves as European Commissioner for Economy and Productivity, as well as Implementation and Simplification, leading the coordination of EU economic policy and driving the agenda to reduce administrative burden and improve the implementation of EU rules. But what makes Valdis truly outstanding and makes his voice particularly compelling today is the real depth of experience behind. A former three-term Prime Minister of Latvia, he was the country's longest-serving head of government. He was a former Minister of Finance, and he had multiple terms as Vice President of the European Commission, where he oversaw trade, financial stability, capital markets union. He navigated crisis. He has driven reforms. He shaped European policy at the highest levels for well over a decade. So I think there's nobody better to talk to when it comes to talk about how to tackle and how to resolve Europe's problems, because Valdis navigates it right now from the Commission, but he has also not just seen it, but navigated it from the member country perspective. And we know that member countries are the linchpin of making all of these reform efforts work. Now, before we start with this important conversation, let me go to the urgent. And you are probably all very interested with the discussions on the implications of the war in the Middle East. What is the impact on Europe? What is Europe's reaction to deal with the challenges another war provides in terms of spillovers to the European Europe? Valdis, over to you.
Well, thank you very much, and thank you for this invitation. And it's a pleasure to be back to IMF spring meetings. And good afternoon, everyone. Well, on this immediate economic impact of the war in Iran, in European Commission we had run some scenario analysis. Of course, it depends a lot on the duration of the conflict, how pronounced the oil and gas price shock is going to be. So according to those different scenarios, we estimate the economic slowdown in the EU by some 0.2 to 0.6 percentage points, depending on scenarios, and simultaneous increase in inflation, which may even exceed 1 percentage point. So what we are facing is basically a stagflationary shock, so simultaneous slowdown in economic activity and increase in inflation. Just by a comparison, before the war in Iran, our forecast for economic growth in the EU was around 1.5% for both this year and next. Then in terms of policy response, on one hand, it is an energy shock, so primarily the action lie in a sector of energy, including we are working closely with International Energy Agency on coordinated release of oil reserves. We are looking at EU energy market structures, which needs to be adjusted in current circumstances. And in terms of broader macroeconomic policy response, our recommendation to EU member states is to keep it temporary and targeted, also mindful of fiscal limitations which we are facing, because the fiscal situation we are having now with higher debt levels, with higher deficit levels, with higher interest rate environment is different than the one we were facing, for example, when we were confronted with COVID-19 pandemic, and also with a previous energy crisis, which was linked to Russia's aggression against Ukraine. And one of the lessons learned from this previous energy crisis is that the measures, we need to have a strong focus on measures being temporary and targeted, because what EU member states did back then was much less temporary and much less targeted than it should have been, and correspondingly much more fiscally costly. So this is something which we want to avoid this time.
So why is it so hard, given that there is so little fiscal space in Europe with many countries, to actually keep these measures temporary and targeted? When we are looking at the last energy crisis, the Russian energy crisis, the average costs was 2.5% of GDP. 80% of the measures were untargeted. If you had targeted it to the 40% lowest income earners in a country, it would have cost you 0.9%, but it went everywhere. And I should say I had a discussion today, or a number of discussions today already with country authorities, and ministers of finance agree with your advice, temporary and targeted. And I ask about what about this temporary thing, about the measures you still have in place from the last crisis? And the answer was, well, they are sort of temporary, but now we have another shock, and the temporary extends for the next shock. So how do you get your message through to ministers who understand, but then don't seem to be acting along those lines?
Some of the messages which we are trying to pass now, for example, when measures are designed, they should come with a clear sunset clauses, exactly to make sure that they remain limited in time, and also that they do not create undue increase in demand for oil and gas, exactly when we should be decreasing the demand. Of course, the problem is that often it's easier to go for a broad brush measures across the board, or some tax cuts and so, because that's something which is easier to implement. You don't need to see how exactly you do this targeting, where do you draw the line, and so on and so forth. But as you rightly noted, this comes with then much higher fiscal cost. And right now we have more limited fiscal space and also tighter financing conditions, so that we need to be more focused and more targeted in today's response.
Okay, thank you. So this was the urgent. This is the current shock we are living through. We had the pandemic, we had the Russian gas shut off, the Ukraine war, the cost of living crisis. Last year we had the shock on the trade side. This year it's the Middle East conflict and the Middle East war. Lots of shocks, lots of overlapping shocks, huge demand on policymakers. In particular then also, given limited bandwidth, looking at the important. And we want to discuss next the important issues for Europe. Europe has a productivity growth problem. It has fallen back compared to the US. This has been an issue which has been discussed for quite a while in the Commission, but more broadly also in Europe. What needs to change in order to deliver that productivity growth and increase the living standards of European citizens?
Thank you for this question. By the way, administrative intervention, I see people standing in the back and I see 3 seats in the front, so if someone feels like moving to front, there are 3 seats you can sit. So we can wait for a second.
And there's still seats in the first row.
Yeah, please. No need to stand.
Prime seats. Leg room.
Yeah, extra leg room seats.
So after having taken care of with an administrative intervention to optimize the outcome of the seating in this room, back to productivity.
Indeed, we just discussed immediate policy repercussions, but it's true that EU has structural competitiveness and productivity issues, and productivity growth in the EU is lagging behind that of other major economies already for decades. So it's something we obviously need to address. So this is why when this European Commission started the mandate already well over a year ago, one of the first initiatives we put forward was competitiveness compass. So already well over a year ago, one of the first initiatives we put forward was competitiveness compass. So it was drawing heavily on Draghi report, and we mapped basically all the major factors affecting EU's economic competitiveness and what needs to be done to address those factors. And that's actually a very broad range of factors. We need to invest more in research and innovation, where we are investing less relatively to size of our economies than other advanced economies. That we need to deal with relatively high energy prices, which was the case already before the war in Iran, that energy prices in Europe were higher, like in US or China. That we need to make sure that the workforce is equipped with the right skills for a digital knowledge-based economy to which we are transforming, that we also need to address our excessive administrative burdens. That's where our simplification agenda comes in, and we are currently working across all those different sectors. So there is no one silver bullet. We can say, okay, we do this, and then we solve our competitiveness and productivity problem. There's patient work across different policy areas.
So how much progress have you made? The leaders set a deadline of 2027. This is an ambitious one. I know the European Commission has been working very hard in terms of moving out legislative proposals in particular. How do you assess progress so far?
I would say we are making progress, and again, each of those policy areas has its own dynamics, its own timelines. So maybe just to indicate some. To start with this simplification and reduction of administrative burden, since I'm in charge of coordinating this work in European Commission, we had set ambitious target to reduce administrative burden by 25% for all companies, by 35% for SMEs, which would translate in a reduction of administrative burden by 37.5 billion euros in terms of annual administrative costs by the end of this Commission mandate in 2029. And we had been for a good start. So in the first year we put forward 10 major simplification proposals, what we call omnibus proposals, which, if legislated, would generate some 15 billion euros per year in terms of administrative savings. So it shows it has been a strong start, but we need to keep the pace to arrive at our 37. Then, if we look on the need to invest more in research and innovation in strategic technologies, there are quite a few initiatives responding to this demand, including our Industrial Accelerator Act, including our important projects of common European interest, also in a context of security situation, European Defence Industrial Plan, and looking forward, if we look for the next multi-annual financial framework post-2027, we propose also to set up a new EU competitiveness fund so we can step up our investments in these areas. And so I could go across all of those different policy areas. One I didn't mention regionally, but which is equally important, is access to funding. So our Savings and Investments Union, where we have a number of proposals which are already on table for member states and European Parliament to decide. So it's important that we make progress on those.
So the Commission clearly is moving. We have done an analysis of what the benefits of reform packages in Europe actually is. And when it comes to European reform, removing intra-European trade barriers and easing the rules, bring that to the level and friction of what you have in the US. If you do the labor market reforms, including on skilling, upskilling of workers, and make labor mobility as frictionless as in the US. And if you are going to do domestic structural reforms, which are needed to support this ambitious European reform agenda, it's going to generate, brings in another 800 billion euros over 10 years in private investment. And it would increase per capita GDP, truly stunning number. And leaders clearly in their summit were endorsing this agenda wholeheartedly. So it seems to be a no-brainer to rush along in order to take that money off the table. But what challenges are you encountering? I mean, I see the Commission has made great progress in moving all of these packages out. Where do you see the stumbling blocks in this process?
The devil, as often, is in the detail.
Okay.
Indeed, we have a broad political support at the leaders' level for our competitiveness proposals, concrete initiatives. Obviously, each member state starts looking deeper, looking at their national position, who is to gain, who is to lose what, and those discussions are becoming much more difficult and much more nuanced. But that's why we're emphasizing a lot and hope also for some push from the leaders level when we are in practical legislative process to stick with those broad principles we want to put forward, to stick with the European value added, that we are actually able to move to make progress again. So it's just translating this broad political will into everyday legislative process.
This is an appeal to member countries to actually move and act and find compromises as requested by their leaders.
Indeed.
Good. Moving to economic resilience, because one of the most important issues these days with more geopolitical and more geoeconomic fragmentation is economic resilience. And when we are looking at Europe, Europe is a continent which has embraced an open multilateral trade system and is especially vulnerable in this global constellation. And clearly the reform agenda is also targeting to strengthen economic resilience. More economic power, higher growth, higher income makes you clearly stronger. But then one question also, how to deal with some of the more intricate things. We found out in the pandemic how fragile global supply chains are. We found out that global supply chains can be weaponized. How do you see, how should Europe respond to these kind of vulnerabilities and minimize or mitigate them?
Well, indeed, that brings us to our economic security and resilience agenda, because indeed we saw it during the COVID-19 pandemic. We saw it following Russia's aggression against Ukraine. Indeed, we saw it during the COVID-19 pandemic. We saw it following Russia's aggression against Ukraine, when Russia tried to weaponize our dependency from their fossil fuel supplies. We see it more recently with China trying to use its leverage as regards critical minerals, rare earth supplies. So we are working to address all those elements. First, as regards fossil fuels, we are decoupling from Russian fossil fuels and generally staying the course as regards our Green Deal, and so minimizing the share of fossil fuels in our economy. As regards this decoupling, for example, on gas, now our largest supplier is Norway, closely followed by United States. So this has been quite a shift. Then, when it concerns critical minerals, rare earths, many of those supply chains are dominated 80, 90, more than 90% by China. Mm-hmm. And that's a concern we share with the United States, with other G7 countries, with other countries. So we are working also at the G7 and other fora to see how we can work on diversifying those supplies, how we can help to make sure that the initiatives for extraction and processing of those rare earths outside China can be commercially viable in a situation when China is dominating the market. So this is a work which is currently ongoing. And then more broadly, we see that we can reach resilience through diversification. Mm-hmm. That's why from European Union side we had been actively pursuing our trade agenda, concluding new trade agreements. So in the recent years we have concluded trade agreements with Mercosur, with India, with Indonesia, with Australia. We continue our negotiations with United Arab Emirates, with Thailand, Malaysia, the Philippines. So we have very strong trade agenda. We are engaging in what we call raw materials partnership with various countries around the world. So one important element for resilience is diversification.
Mm-hmm. So you have been a very strong advocate for an open trade system, and you also brought these benefits to Europe in your trade negotiations. Are you concerned about the discussion of Europe which is not going for diversification, not going for strengthening trade relationship, but which becomes more protectionist as a reaction to it?
Certainly this risk is there. Generally, we see some kind of a turn towards protectionism by American, by European, by whatever. But we see that at the end of the day, if this protectionism is successful, if we have a global economic fragmentation, it can lead to severe negative economic consequences for the world. I think it's IMF own estimates already some years ago that if this global economic fragmentation is happening and trade is concentrating in certain economic and geopolitical blocks over the medium to long term, it leads to somewhere like 7% lower global GDP. So it's a very sizable negative economic impact which we ought to avoid. And that's while We need to think about economic security. We need to think about unfair competition, about resilience, and how focused interventions there. But we should not forget that at the end of the day, functioning rules-based international trade system is for the interest of everyone.
Mm-hmm. You mentioned already the issue of energy security. And when we are looking at the strategy you have in place, especially with the Green Deal, to produce decarbonized, affordable, and you will mitigate to a large extent the issue of energy independence by really reducing it greatly by relying more on renewables and possibly nuclear. Are you concerned about these calls who currently, because of the urgent, are asking for a suspension of the emissions trading system for a short-term gain, but potentially with a long-term loss?
As we see in recent times, we repeatedly see this volatility in fossil fuel prices. We had a spike after Russia's aggression in Ukraine. We had a spike now in the context of war in Iran. And that's why in the EU, indeed, as part of European Green Deal, we are working to reduce our dependency on fossil fuel supplies, because those are largely also imported fossil fuel supplies, so it reduces in general our energy dependency, rolling out renewables, indeed having a fresh look at the nuclear and its role in the decarbonized energy systems, and there it's important that we stay the course. Therefore, we are not considering in a suspension of energy emission trading system or other initiatives. We are looking, as I said at the beginning, at certain features in our energy market design, at some targeted short-term interventions which may be needed. But when I was describing our policy response, I was emphasizing a lot temporary and targeted, but another parameter which we are emphasizing is that it also decreases demand.
Is there any chance of actually to accelerate the agenda? Because clearly we have one energy shock after another. If you want to insure you against and the next possible shock, it would be advisable to move faster rather than just staying the course.
On some aspects, we are actually bringing forward some elements, like in energy market design, for example. How do we address the issues of the link of electricity price with natural gas price? So now when natural gas price is peaking, it kind of automatically leads to the peaking of electricity price. So the member states could use more contracts for differences to mitigate these kind of effects. So we're looking indeed at some elements. There may be acceleration or adjustment needed, but obviously to accelerate this agenda, it also requires lots of investment. Mm-hmm. And there we already have ambitious investment plans, both in terms of rollout of renewables, on energy efficiency, but it's also critical that by and large, as we move towards more electrified economy, it's a grid efficiency to able to cope with this more decentralized energy production, and grid interconnections across member states, where lots of progress has been made over the recent decade or more, but still many issues remain to be addressed.
Mm-hmm. We at the IMF has also been arguing that actually a EU budget focused on larger allocations to European common goods, including the energy transition, including defense, including R&D, would help Europe coordinate and would actually make these transitions actually cheaper. Do you see this MFF in an enlightened way moving forward?
I mentioned it briefly at the beginning. So we had put forward our proposal for the next multi-annual financial framework, so 2028-2034. And indeed, it responds to many of those issues. I was mentioning the competitiveness fund, which is there to address many of our competitiveness challenges, support strategic industries. We massively step up our investments for defense and security in the next MFF, because that traditionally has not been an area in which Europe has been active, but current geopolitical situation and Russia's threats require. So there is a massive increase for defense and security. Of course, what is important when we are advancing all of this agenda, that we are actually advancing all of this agenda in EU 27, that we do not end up with some kind of two-speed Europe, that all member states can have a benefit for this. So that's why also the cohesion policy and a need to address also the social economic differences across member states and regions remains very important.
Mm-hmm. That is a nice segue, I think, into the third issue, which you are trying to address also with European problem. When you're looking at the spending pressures which are going to hit economies, we calculated that on average for Europe by 2040, additional spending requirements from pension, from health insurance, by 2040, additional spending requirements from pension, from health insurance, from the various transitions, from defense will amount to 5% of GDP. Europe is not different, but Europe needs to tackle this issue as well. Question here is, are you seeing Europe being able to cope with that? I recall that defense is one of the longer-term spending pressure, which suddenly became a current spending pressure. So it was brought here and now in the fiscal rules the European Union designed in order to have fiscal sustainability amongst all member states. You had an escape clause for national defense. Now, it's not, as we economists would say, there's no free lunch. In the end, you are not going to escape from increased spending on defense. Now there have been calls for a general escape clause because of the war in the Middle East. How do you see these developments?
Well, indeed. So we are now more than a year implementing our new economic governance framework, so we can draw first lessons. And when we were designing this new economic governance framework, the idea was to have more medium-term focus, so agreeing with member states medium-term fiscal structural plans, 4 to 7 years, depending on circumstances, to have also more counter-cyclicality and certain automatic stabilizers, which will be able to work actually also now when we are facing this slowdown of economic activity due to the implications of war in Iran, and possibilities to have a national and general escape clauses. So all in all, we saw that in the first round of application of the new fiscal rules, we managed to ensure this debt sustainability while also preserving the level of public investment, which was probably not the case when we were responding to the global financial and economical crisis more than a decade ago. But then if we talk about defense, you are right. There is no free lunch, so what we close to increase defense expenditure by 1.5% of the GDP for a period of 4 years to allow member states to rapidly increase the defense expenditure. But we also had been clear that during these 4 years, member states should use this period also to adjust to the fact that they are going to have a structurally higher defense expenditure and readjust their budgets accordingly. So after the 4 years, the normal application of the fiscal rules. Then on a general escape clause is there to address severe economic downturn in the EU or euro area as a whole. Currently, we are not in that scenario. We are in a scenario of economic slowdown, but not severe downturn. So that's why we are not proposing to activate the general escape clause.
Good. Then let me move to another topic, Russia's war in Ukraine. The EU and its member countries are the largest supporter of Ukraine. And we saw over the winter again a huge destruction on the energy side. That's a true energy crisis there with huge toll on the population. So you are trying to help out. At the same time, the Ukrainian government, and I think also shared by the population, has an ambition to become a EU member. And many of the reforms undertaken see that progress Ukraine is making.
As regards Ukraine, so from the EU side, we are committed to continue to support Ukraine with all it needs. And the EU and its member states are by far the largest supporters of Ukraine. So far, we have provided support of some 195 billion euros if we cover different aspects of support. We have proposed a new Ukraine support loan of 90 billion euros for this year and next, which would have still this feature of the reparation loan in a sense that Ukraine only would need to repay it when Russia pays reparations for damage it has created in Ukraine. As you know, we got stuck with this 90 billion euros package due to the fact that Prime Minister Orban of Hungary was blocking this package. But now, with the election results, the likely new prime in December last year. So will be able to unblock this situation and make sure that Ukraine can start receiving this funding, because in parallel we had also done lots of technical works and preparations so that we are able to move forward really quickly once it's politically unblocked. We obviously welcome the fact that IMF has announced a new program for Ukraine and is already processing with the first disbursement, and there is a new program, and clearly underpinning both IMF and our support programs, our macro-financial assistance programs, Ukraine facility, there is reform conditionality. And there we are working closely and aligning our approaches with IMF, because it's important to sustain this reform momentum. And all in all, I would say over the years there has been a strong reform dedication and willingness from Ukrainian authorities, despite very difficult war circumstances, and we had been making it clear that the future of Ukraine is in the European Union, but it requires lots of work from Ukrainian side to get ready to be in line with EU requirements across many different policy areas, and that still requires many reforms. So it's important that Ukraine, in a sense, stays the course with this reform agenda, and that there is no slowdown in this.
And if there were a slowdown and the financing needs were high, how would you react?
I think we need to engage with Ukrainian authorities to see what are the underlying issues, how do we address, and how do we continue to make progress. And I think this perspective of EU accession is a very strong motivation and driver for reform.
What are the views amongst your membership? Some are pushing for fast accession. Some are saying these reforms...
as you rightly noted, it's still being debated in the European Union, and also, so to say, positions of member states vary a bit on how the enlargement process in the EU through different sectoral policies, through integration in a single market, and some possible other candidate countries are being integrated gradually. And we also have, for example, with Ukraine, a kind of single market action plan, how we facilitate Ukraine's integration in a single market. But to have a full EU membership, that obviously requires this readiness across the board. So while there are a number of things we can do in a process, we still need this reform agenda to arrive at the full membership. At the same time, there are also some discussions within the EU, how the enlarged European Union should look like. Mm-hmm. Already now, with 27 member states, we often face difficulties in taking decisions. And what will happen if we'll have a European Union of more than 30 member states, as it's likely to be if we look at our current enlargement agenda. And that's where the discussions come on also in certain policy areas, moving away from unanimity to qualified majority decision making. There are questions remain how, in a sense, member states should be able to protect kind of their legitimate interests, but not to use this unanimity principle just to block decision making, as we unfortunately had seen recently. So it also requires serious parallel.
Mm-hmm. So these are architectural changes, and they are very difficult to do in an environment where policymakers' attention is always on the urgent. So how do you drive this discussion forward, that there will be focus on these kind of things, which are essential of having an effective union with a larger membership?
No, as I was mentioning, this discussion is already taking place in a context of EU enlargement, because on one hand we have put enlargement back on the EU agenda. Maybe in 5-10 years ago it was more in a back burner and we were not making real progress on enlargement. Right now enlargement is firmly back on the agenda, so we're serious. There is going to be enlargement, and correspondingly also those discussions on the institutional structures of the EU are also becoming more concrete and more urgent.
Mm-hmm. And to come back to the economic benefits of enlargement, we did a study of the 2004 enlargement wave, and we found that over a period of 10 to 15 years, of the new members, GDP was higher by 30% compared to peers which didn't join. It's a huge benefit, economic benefit of joining the Union. But it was also a huge benefit for those countries which are old members. They gained as well. And we calculated that would be 10% of GDP increase, which they otherwise would not have had because they had a larger market to work in. So all of this clearly points to more single market, more integration, more European Union. Are you confident that this is shared by all of the member countries and the population recognizes that this is a treasure which they need to value?
Single market is obviously our largest economic asset, and you can increase the scale of the single market both by geographically expanding the single market, but also by removing barriers within the single market. And enlargement is there. but there will be always limits to enlargement, but there are still substantial barriers which we face within the single market in area of goods, but especially in area of services. And that's why we also put forward the single market action plan. How do we remove barriers in the single market? There, whether member states' populations are on board, it's on one hand, if you have this broad policy and political discussion, do we need a functioning single market? Do we need less barriers to the single market? The answer is resounding yes. But the problem is that each of those barriers in a single market, someone is sponsoring those barriers. So it's someone's interests are being touched when this barrier is being touched, and that's where it's becoming more complicated. So there's also, therefore, certain political will and.
Good. And we want to give you a chance of also asking the Commissioner questions. We have about 13 minutes for that. Please.
Hi. Good afternoon, ladies and gentlemen. My name is Aryan Khanna. I'm a student at the George Washington University. First off, thank you, Mr. Commissioner, for coming in with your insights. Mr. Commissioner, what are some economic impacts anticipated by the Commission as a result of recent elections in Hungary in the context of inter-European economic cooperation and growth beyond Ukraine? Thank you.
Well, yes, thank you for this question. Well, we are not doing this kind of economic impact assessments. European Union is a union of 27 democracies. There are always elections somewhere. So, therefore, it's difficult to do this kind of impact assessments election by election. So we do our regular economic forecasts, and we are scheduling our spring economic forecast the next months. We did some ad hoc assessments now on the economic impact of war in Iran, and so. But we are also regularly assessing the economic situation in each member states and providing it also with economic or socio-economic policy recommendations. And we'll have this next cycle of this, what we call European semester, in June. And probably one of the urgent priorities Hungary would need to address, and now there is hope. There is lots of EU funding which is currently blocked for Hungary because it's, the outgoing government was not meeting the rule of law conditionality or kind of fundamental rights or values linked conditionality, which a new government in Hungary will be willing to address, and that will help to unblock very substantial amounts of money. We are talking billions of euro here for Hungary, and help also with providing a boost for Hungarian economy.
Thank you very much. My name is Eugene Kim. I'm a research associate at Jefferies, which is a global investment bank. My question for you, Mr. Commissioner, thank you so much for being here. How do you see the economic and security relationship with the U.S. going forward? Thank you.
Thank you for this question. Well, EU approach for this is that we see an necessity for continued transatlantic engagement, both for geopolitical and economical reasons. Economically, we are each other's largest trading partner. Our trade and investment relationship, a case and strong interest on both sides that we continue our engagement and cooperation. And similarly, if we look at security, We see that authoritarian regimes across the world are flexing the muscles, are willing, so to say, to change the world order, and as a democracies, we need to work together and to address all those threats and risks which we are facing. Obviously, in Europe, we see Russia's aggression against Ukraine, but Russia also Russia's aggression against Ukraine, but Russia also openly talking about invading other European countries as a serious threat to be addressed, and also count on U.S. cooperation in this regard.
If a question way in the back.
Hello, thank you for your presentation and thank you for being here. I'm Sabah Abisadze. I'm a student at Luther College studying economics and political science. My question to you is, what would you say is Europe's main constraint today? Is it fiscal space or investment efficiency? Thank you.
When we started this political cycle as a new European Commission, well over the year already, we set two main policy priorities for this political cycle. One is competitiveness of European economy, and another is security and defense. And now, more than a year on, if anything, those two priorities are even more urgent. And as always, we'll have to see how we address those priorities also within the constraints which we are facing. Fiscal space is limited, as you noted. Investment efficiency, there's always scope to improve. So our policy right now is linked. How do we best address zones or limits which we are facing?
Mm-hmm. Was a question in front? Yeah, please.
Thank you, Elena Savova, Bulgarian News Agency. Thank you for this opportunity. I would ask you, President von der Leyen presented some outlines for common European measures against the energy shocks. Which of these measures should get in action most immediately, should have most immediate effect, given the situation? And what financial complications could they have? And influence the longer-term priorities of the European Union when it comes to priorities, when it comes to long-term budget, etc. Thank you.
Maybe let me start with a second question. I mentioned two overarching priorities on competitiveness and security and defense, and if anything, also current situation makes these priorities more urgent. So in terms of priorities, I think it's clear what are the issues what we need to focus on. In terms of immediate response, obviously the immediate response is focused in the area of energy, because first and foremost for Europe it's energy supply and energy price shock. So one measure which is already being taken is work with International Energy Agency on coordinating release of oil reserves to alleviate some of the pressure in the market. We are currently working also on a temporary state aid framework to provide member states for more possibilities or some additional flexibility for supporting their industries which are facing this energy price shock. They was mentioning some targeted measures which we are looking at energy market design, and well, I would say all of those measures are urgent, and we are moving quickly ahead and actually implementing some of them already.
Okay, question in the front.
Thank you very much, gentlemen. Carsten Gerhardt from the Circular Valley Foundation. I was very intrigued by what you said about resilience through the diversification and broadening of trade relationships. What you did not mention is like what was in the Circular Economy Action Plan in 2020. So how important is closing economic circles in the European Union?
Circular Economy Action Plan is part of the response, both economically and also in the context of European Green Deal and the environmental limitations which we are facing. So it is an important part of this equation. For example, if we discuss raw materials, Europe is not a major source or producer of raw materials. For example, we have our Raw Materials Action Plan, which foresees by 1930 to source 10% of the raw materials which we need domestically. And I would say even that is optimistic, but it's 10%. So 90% will need to come from outside. But when it comes to recycling of the raw materials, we are setting much more ambitious targets. We want to source 40% domestically, just indeed showing that we see lots of potential also in recycling and in circular economy.
Mm-hmm. We have time for one more final question. Please, here.
Hello. Hoping that this long agenda of structural reforms gets delivered and is effective, but how much are you incorporating of a boost to productivity or growth potential in your medium-term growth projections?
Normally in European Commission we are taking a somewhat cautious approach, and I say quantifying only the measures which are taken and where we do have measurable impact. So in a sense we are not getting too creative here, anticipating certain productivity gains which may or may not happen. If we see quantify it, we put it in our projections, but we are exercising a degree of caution there.
Yeah, and we at the IMF are as conservative as the European Commission is. That tells you also that there is a huge upside potential to the medium-term growth projections. And with that, I want to thank you, Commissioner Dombrovskis. He is certainly a man who knows the answers. We also have seen him as a man who acts, because the European Commission is producing as charged by the leaders. And I think now it's a real appeal to the member countries of the 27-strong European Union to turn the plans into actions in order to derive the dividends for their populations. Higher living standards, more resilient economy, and deal with medium-term fiscal pressures so that countries keep to their social contracts. And a big applause, a round of applause for Valdis, please. Thank you.